Okay, our disclosure, Monday, April 5th, 2010. Today's topic is trading and analysis. Your tour guides for today are myself, Ryan Watkins. We have Michelle Volmering and Kevin Green as well. Now, some of you may know Kevin Green is joining us in the XLT room. He's an absolutely excellent instructor. In fact, he's been of all of our instructors, he has been rated Instructor of the Year probably about 8 billion years in a row. And so he's an old guy. 8 billion years is a long time to be Instructor of the Year. So, but he's a great guy, and you guys are going to absolutely love him for his instruction and his services here. So he'll be joining us today as well, and you guys are going to really enjoy Kevin. He's absolutely awesome. As a matter of fact, when I graduated my Pro Trader course back in 1999, Kevin was one of the instructors there. So, he was one of my instructors way back then. So, believe me, he knows what he's talking about, and you guys are going to absolutely love him. All right, so today's agenda. We're going to go through our pre-market routine. We're going to search for trade opportunities. We're going to take a 10-minute break. Market opens, trader plan, stick to the plan, and then we'll have a little 10-minute Q&A unless we're actually still in a trade or anything like that. Okay. Now, when it comes to going through our routine and setting up what it is that we're doing for the day here, just a quick little review, quick reminder of what it is that we're first looking for. First, we want to identify the stage of trend that we're in, and then identify those supply and demand zones. Okay, so we want to identify if we're in a stage 1 or stage 3, that's our basing pattern. Stage 2 uptrend, stage 4 downtrend. Now, this is going to depend on which time frame that we're on, but you guys are stock mastery, so I'm going to give you guys a quiz right off the bat here, first thing in the morning. See how sharp you guys are here this early. In a stage 1, what are our rules? What can we do here? What's our rules? When do we buy? When do we sell? Do we do everything? Do we do nothing? What do we do? Oh boy, we got a lot of different answers here. Yeah, this is why trading works. Buy low, sell high. Okay, good. So as long as it's in our basing pattern, we're focused on buying the low, that's in our green circles here, selling high, that's in our red circles there. Now, what this does is it gives us the maximum amount of profit potential with the least amount of risk and the highest amount of probability of that trade working out in our favor. Okay? So, we're focused on buying low, selling high, selling short high, buying cover low. Okay, so buy low, sell high. Okay, you also have at some point in time, a breakout above the high or below. Okay, so we're focused on buying low, selling high. Now, many traders are uneasy trading these breakouts, and for good reason. Many times they fail. So instead of trading the breakout, what are we focused on after the breakout? What gives us a little better chance? Good. Okay, so we're looking for that very first pullback, the very first retest after the breakout. Okay, so there it is there, very first pullback after, and that would be like this right here, where this green circle is. Okay. Okay, so buy low, sell high, or just wait for the breakouts to actually occur for us. Now, if a stock does break out, let's say it's right here in our trend, it just now breaks out, and it's just now putting in that very first pullback. Give me some odds enhancers, something very specific when it comes to volume of what it is that we're looking for after a breakout there. What gives us some very, very good odds after the breakout? Okay, I'm saying higher volume on the pullback, good, and low volume, or excuse me, higher volume on the breakout and low volume on the pullback. That's right, okay, a low volume or light volume pullback. Okay, now why is that light volume pullback so important to us? What does that really matter? Okay, good, not many sellers. Yeah, it shows that the bulls are strong, they're in control, but also gives us confirmation that the breakout is for real. Because if there is aggressive selling, that's very typical of a false breakout, and that thing's coming right back down. So when we have that light volume pullback, it's telling us that the selling pressure is very passive, and we can expect that trend to continue. That's why we're focused on that first pullback after a breakout, and make sure it is a true breakout. Okay. Okay, so we're after a breakout, we're after the pullback, now we're in our stage 2 uptrend. What are we focused on up here in our stage 2? What do we do during this time period here? Okay, 2 things, good, yes, let profits run, very good, because you're getting higher highs and higher lows, so let those profits run. You have the ability to let profits run. So this would be like on an outside day or a trending day. As long as you have that trending day or trending time period, whatever time period is that you're trading, we can definitely focus on letting those profits run. That's going to give us that big profit. So that's what we want. Okay, and then yes, we're focused on buying the dips to the drop base rallies. Okay. We're focused on buying the dips at the drop-based rallies. Now, stage 3 up here is going to be exactly the same as our stage 1. Okay, so I'm going to slide that right up there. And there it is, buy low, sell high. Okay, same thing as our stage 1. Now, stage 4, what are we focused on now? What do we do in our downtrend? Good, sell the rallies, good, sell the rallies. So we're shorting, that's our focus, is always on that shorting there. And we're focused on shorting the rally base drops. Okay, focus on shorting those rally base drops. So the pullbacks, in other words, okay, it pulls back up into a rally base drop. Now we can get short, let profits run. Okay. Now, when we follow these rules here, what this is doing is putting probability on our side. Imagine going into a casino in Las Vegas. You sit down into a roulette wheel there, which gives you a little less than 50%. And for some reason, all of a sudden, you go to the pit boss and you say, "Excuse me, Mr. Pit Boss, can you take off those 2 green little ones there, those 2 green ones? I don't want the green ones. I want to enhance my odds." And he says, "Well, of course, yeah, no problem. And while you're at it, you know, take out all of the even numbers while you're at it. I only want to trade the odd numbers." And he says, "Well, yeah, of course, no problem. And while you're doing that, let's just take all the red numbers out, the red ones out as well." So now you have all the odd number blacks, and you're going to bet just on the odd black. Have you increased your chances of success? Big time, haven't you? And so that's what we're trying to do here, is put the odds on our side, put the probability on our side. So we're buying the dips. Okay, we're going with that wave. Where's that casino? Only in my mind, Trade King. Okay, so we're putting the odds on our side here. We're putting our odds on our side here in the downtrend as well. Okay, so when we go through our stocks today, I want us to identify what stage we're in, and then just follow our rules. Okay, a lot of it is just this pattern recognition. What pattern am I in? A basing pattern, an uptrend, a downtrend, and that's going to really put the odds on my side as far as where I decide to enter and exit trades. Okay, and then just the last thing here, as a review, we'll focus on the demand zone, focus on the supply zone. Everything in between is the noise. Okay, that's our profit zone. That's where we let profits run. We're always focused on buying low, selling high. Okay, we want the least amount of risk with the most amount of profit potential ahead of us, with the highest amount of probability working on our side. Okay, so we're always focused on buying low, selling high there. Okay, so let's go ahead and start going through our routine here. Let me go ahead and close this application share. So I'm going to take away the PowerPoint, taking away your toy. All right, so let's see if I can get on my other computer and show you the application share on this then. Hopefully this one will be working. It was misbehaving earlier this morning. I had everything loaded, all my lines marked and everything, and then poof, it was gone. Okay, so let's give this a shot here. Here's application share. Okay, give me a number 1. If you can see I should be able to see briefing.com right up in there. Okay, good. Thanks, Evan. Okay, good. Okay, so I'm going to go ahead and log in to the free section. And we're going to go right up here to calendars. Go to the economic calendars. Not a whole lot out today here. Okay, just your ISM services, which isn't your biggest bang for the buck report out there. Okay, so that's coming out at 10 Eastern. Now, a lot of you guys have been asking about that 10 a.m. reversal, and a gorgeous one on Thursday. I hope some of you guys got that one. Okay, that was a beautiful one. I'll show you that a little bit later on when we talk about bull and bear traps and things like that. But one of the reasons why, good Evan, very good. One of the reasons why that can be a little bit impactful is because oftentimes you'll have reports come out at 10 a.m. as well. Okay, it's not the only reason, obviously, but it definitely adds to it. So really not a whole lot going on today here. Okay, ISM service, we have pending home sales as well. And both of those are at 10. Take a quick look at the upgrades and downgrades. Now, why are we looking at upgrades and downgrades? Why would this be an idea to look at this? Good, a couple of things. Yeah, price movement for one thing, momentum. Okay, a lot of times when you get an upgrade or downgrade, it can offer us momentum, and that's what we want. We want momentum. We want price movement. And yeah, like Patty's saying, it could be gapping up into supply or demand. So oftentimes we can get these big announcements like this, and it gaps up into supply and demand, so it can offer some pretty good gapping opportunities for us. Yeah, just looking for things that are out of balance for their supply and demand zone, and yeah, it can definitely move the market. So really what we're looking for is some big namers on here, something that's going to have a lot of influence. Okay, like take, for example, here's Juniper right here. Okay, Juniper went from market perform to outperform. Okay, so we got upgraded on that one. So we want to just pay attention to some of these. Now you'll see these on the radar screen as well, but not everyone on here is using TradeStation. So I just want to offer this as an idea to identify momentum. So especially when it comes to the gaps, big gap up, big gaps down. If it's gapping into a demand zone, gapping up into a supply zone, now we definitely have something to go by for those first few minutes of the opening. Now keep in mind, I just brought this up as a gap trade, a gap type of trade. We don't want to just trade the gaps if you're not ready for them. They are more volatile than any other time in the day. They can offer us a lot of risk. Okay, we don't want risk. We want to minimize risk. We want to avoid risk. So we want to do all the trades that offer us a very little amount of risk. Okay, so if you're not used to trading gaps, or if you don't have it in your trade plan, just either don't trade it and watch it first, or use it in simulator based on your plan for the first month or so, and then once you get a hang of it and get some consistency, then go live. But trading gaps is definitely not something you want to do right from the beginning. Okay, it can be can really hurt your account very quickly. Okay. Let's take a look at this week here. Okay, we have earnings as well. Okay, so we got Wednesday and Thursday right here. Now, why is this important? Why are we looking at this? Why are we looking at the earnings reports coming out? You guys didn't think I would test you first thing Monday morning, did you? All these questions. Okay, watch price. In other words, yeah, price movement. So it can definitely give us price movement. What's even more important than that? It is full screen. You have to maximize it on your end. I am on full screen on my end. Yes, good text, W. Yeah, we definitely don't want to hold the stock into earnings. It's the most important thing. We don't want to hold the stock. You don't want to stand in front of the bus. Exactly right. Okay, you don't want to hold the stock into earnings. Okay, so if you're in a swing trade, you want to make sure, like for example, Bed Bath & Beyond. I own Bed Bath & Beyond. Earnings come out Wednesday. I need to be aware of that. Okay, I need to be aware of that because if you hold that overnight right there, you are at big time risk. Okay, we don't want to be at risk. Okay, let's start going through our trade station here. All right, give me a number one if you can see my trade station charts. Awesome. Okay, very good. Okay, now on this one here, what we're doing is just taking a look at this. Now I know some of you guys have been asking for these layouts and stuff. I'm actually found a couple bugs in here that I need to work out first, so give me a couple more days on this, and Kevin and I are actually going to stay after today and work on some of these and make sure we get everything fine-tuned for you. And once everything is good to go, then we'll make sure that it's offered to everyone. What size monitor do you have, Ryan? This is an 89-inch big screen plasma H. No, I wish. No, these are 22 wide screens. Okay, so take a look at this here. We have our S&P, the Qs, the NASDAQ, the Dow, the Russell, and the bonds on the top row up here. Okay, so what we're really looking for is who's strong, who's not, where the relative strength is, where the relative weakness is, where's our supply, where's our demand, and so on. Now, take a look at the SPY up here, and you can see we still have our higher highs and higher lows. On the Qs, we're coming up and we have our higher highs and higher lows just barely, okay? The Dow, same thing. Now look at the Russell though. See how the Russell's a little bit different? Okay, not quite the same picture. Close, but not quite. So what's the Russell telling us here? Just by looking at this very last section right here, what stage are we in? I agree. Yes, Kevin is the best debugger in the world. If anyone can find the answer, he can, no doubt about that. Okay, good. Yeah, we're in a stage 3. We're coming from the uptrend right up in here, and now we're starting to base sideways right here. Okay, so that's on the Russell. So when you have a stage 3, what's our focus? How do we trade this? Yeah, good. Okay, good. Very good. As long as it stays in that range right there, okay, we're just buying low in those demand zones, selling high in the supply zones. Okay, that's all we're doing. So it's just identifying the trend and then follow your rules. That's trading. Okay, identify trend, identify supply and demand, and trade your rules. Okay, don't try to make this so complex that you don't know what your rules are and how to do this and how to do that. One of the hardest things for traders to do is just to keep it simple. We want to reinvent the wheel. We want to, create our own, system out there. And really, when it comes down, is just keep the darn thing simple. Focus on what is really, truly important in trading, and that's trading price in the form of support and resistance or supply and demand, and identifying the trend as well. Okay, so right now, on our Russell right here, we're focused on buying low, selling high, or yeah, someone's saying wait for the breakouts on that. Okay. Okay, now take a look at some of these other sectors involved here. We have our financials right down here, the XLF, doing very well, very strong. Okay, been very strong for quite a while. We have consumer discretionary doing pretty well, nice and extended right here as well. Now, in something like this, see how extended this is? Let me blow this up so you can see a little better. See how this is really, this thing is just skyrocketing straight up like that. Very, very extended, isn't it? Okay, this is where it becomes a little bit difficult for the mind. And what I mean by that is, when we look at this chart, we see this as like, wow, that's really extended up there. No way it can go higher. No way it can go higher. It's got to come down. Anyone ever thought that before? I have. I know a lot of traders that have as well. You know, and so they see this and say, no way it goes any higher. And they're shorting this thing all the way up. They keep shorting it and keep shorting it. But what does our rules say? Number one, identify the trend. Well, we're in a stage 2. So we need to focus on those buying opportunities. Go with the probability. Go with what is on your side and go with that trend. As long as this thing stays in that uptrend, your focus is on buying. Okay, once it starts to consolidate and go sideways and base, now we can buy low, sell high. Once it starts to drop back down into our stage 4, now we can start shorting that. Or unless we're in a supply zone, obviously, okay, on a bigger time frame, then we can take those shorts. Otherwise, we stay with that trend. Okay, I've known a lot of traders that just fight the trend, and they've blown out their accounts. They have blown out their accounts. Okay, you know, I'll give an example. And Kevin, you may remember this actually, when we were on the trading floor, back at the old trading floor in Irvine there were a lot of traders that, you know, in the tech boom, these stocks would be screaming up higher and higher, and they're like, no way this thing goes any higher. And they're shorting it and shorting it and shorting it. And they would take such huge positions going against a major trend, like a very explosive trend. They would blow out their accounts, and we'd never see them again. Okay, so that's why I'm always, you know, harping on you guys, stay with that trend. Identify the trend, identify your supply and demand, and go with the probabilities on that. Okay, yes, I know that's expensive. There's no way it goes any higher, but it is going higher. Okay, focus on the facts, focus on the reality, what is happening. Okay, so anyways, there's that. Now, when it comes to these trends, I'm actually doing that hour with the pros on Thursday that's going to be focused on trading price, focused on trading trends. Okay, so I'll give you guys a lot more specific rules around the trends right there, show you how to identify them specifically and how to take advantage of them. Okay, so on here, take a look at these. Identify which one looks the strongest to you. Just type it in. Which one is it? XLF, XLY? Which one of these looks to be the strongest sector of all the sectors there? Okay, I'm getting a lot of XLIs, XLYs, XLF, XLE, XLI, XLF, XLP. This is why trading works, ladies and gentlemen. Everyone has an opinion of what they think is best. All right, let's take a look at these here. And XLI is definitely extremely strong here. There's really nothing over here to the left as an obstacle. XLK, very strong, but look to the left. We have a major obstacle in the way here. We are in our supply zone for XLK. That's technology. Okay, so right now we are in that supply zone. Let me blow that up right there. So when you take a look at this here, we've rallied right back up into our supply zone from over here on the left. Now, we are in a stage 2 coming into this right here. We have higher highs and higher lows. Okay, so we still are in that stage 2. But we are inside of a supply zone. So what do we do inside of a supply zone? What's our rules? Let me put it this way, do we buy? Do we buy? Okay, no, we definitely do not buy. So do not buy. Okay, what else? Can we sell our long position as a target? Okay, good. So we can sell our long position as a target. And we can definitely look to get short. Now, why do I say look to get short and not just an automatic short? We're in a supply zone shorted. Why am I not saying that? Okay, yeah, it is a strong market. Broad markets should correlate. Need to confirm. Yeah, fire burns. Yes, it does. Okay. Okay, so Daryl, you want to wait for the breakdown? Yeah, Q says we are still in that uptrend. So yeah, we are still in an uptrend. Now, when it comes to these rules here, we are in an uptrend, so we are focused on buying. Okay. There you go, Jensen. Try it now. Okay, it should be able to work now. Okay, so if you're focused on buying because you are in an uptrend, however, you are in a supply zone. So the supply zone has more influence over that uptrend there. Okay, does that make sense? Because you are in a supply zone, therefore you do not buy, even though you're in that uptrend. Okay, so the supply zone cancels out the uptrend. Well, only if you're in that supply zone, though. Okay, only if you're in the supply zone. Otherwise, you're fine. Take those long entries in the uptrend. Okay. So good. So in our supply zone, we do not buy. We sell our long positions, if you have any, as a target, and we look to get short. Okay. So right here in our technology, now we can go to this little guy right here. Here's our XLK. This is our technology sector. So now we can see here it is on the weekly. Let's look at that first. Okay, we bring that over here to the left, and you can see our supply zone right there. Let me zoom into this so you can see a little better. There's your rally-based drop. And there we are right there. Okay. Now, one thing when it comes to these supply zones, if, let's say for example, this breaks out, and it breaks out above our supply zone on the left, okay, can we take this breakout? Okay, see how it's kind of consolidating right here, top and tails, but it breaks out above. Can we take that breakout? Okay, I'm getting some yeses, some nos. Okay, Michael says not in this case. Why, Michael? You're correct, Michael, but why? Good. Look left, right? What do we have right over here to the left? We have another supply zone directly above it. And almost directly above that, you have another supply zone all the way up here as well. Okay, so taking these breakout candidates, in this case on the weekly chart, it is just absolutely no good here. You have supply directly above. It's like jumping with the ceiling directly above you. It's going to hit your head, and that thing's going to hurt. Okay, so these are not the breakouts that we want to take. If you're going to take those breakouts, make sure you always look left and there's no obstacles in the way. Okay, very important for that. Okay, so right now we're just focused on that supply zone right there. Evan's asking, Ryan, would you look to buy the breakout above a small supply zone? No, that's exactly what I'm saying here. No, we don't want to take this breakout because you have the supply zones directly ahead of it. Okay, directly ahead of it there. Okay, so here it is on the daily chart. Now, take a look at this here on the daily. Oops, wrong way. Let me zoom in here. Okay, see how we're in our uptrend coming up, higher highs, higher lows, and now see how it just kind of starts to go flat right here? Okay, just kind of going sideways. This is a daily chart. What would this look like on a 60-minute chart? This section right in here. What would this look like on a 60-minute chart? What trend would we be in? Exactly right, just our stage 3. Okay, our stage 3. So in this one right here, can we buy low, sell high in our stage 3? Sure, but we're in a supply zone, right? So our focus is on shorting. So we're looking to short. And where are we going to look to short? Where the least amount of risk is and the highest potential profit. And that's going to be in the upper range of our basing pattern. Okay, so you see how we're kind of putting this multiple time frame to use when it comes to these trends. We start off with the weekly. We know in our supply zone. Now we zoom into the daily, and here's your supply zone on the left over here. Okay, now let's go look at the 60-minute. Here it is right here. Okay, here's our 60-minute time frame. Here's our rally-based drop from right over here. There's our supply zone right there. So if price comes up into our supply zone, we look to short. We can use our odds enhancers and all that good stuff to help us out with that as well. Okay. All right, so as this comes back up here, and let's jump to our 24-hour clock and see where we're trading. All right, so far right now we're trading right down here. 23.05 was your last trade. So if it gets up into here, what we've done now, we've taken the weekly chart, we've taken the daily chart, and we identified that this is a supply zone. This whole section that you see in the entire chart is a supply zone. Now, in order to really pinpoint the best possible entry for us, we go into the smaller time frame, in this case the 60-minute. So if price comes up into here on the 60-minute time frame, this is where we look to short. If it breaks out, then we look for the first pullback on an intraday basis. Okay, can we take a breakout above the supply zone on an intraday smaller time frame basis? What do you guys think about that? I love it, Michael. Maybe. Good answer. Maybe. Okay. Well, we've already identified that no, we cannot take the breakout on the weekly chart or the daily chart because of the, yeah, exactly, look left. We have the supplies on the left. Now, if this breaks out on a smaller time frame, can it offer us intraday opportunities to get long or short? Yeah, absolutely. Good. Okay, absolutely. On a much smaller time frame. So this is where it comes to what time frame of a trader are you at now. This is a more of an intraday day trading type of session. So yeah, we're looking for momentum. Okay, so if we do get a breakout, we're just being cautious here. Wait for the first pullback. Okay, wait. You trade the strongest stocks that have the most order flow and demand coming into that, and that'll give us a lot of help with the odds on our side. Otherwise, we're looking for some bull traps. Okay, so in this case, we'll leave the supply zone up here. I like the supply zone a lot. Let's jump into a smaller time frame and really try to pinpoint this even more. Here it is right here, XLK on the 15-minute chart. Here's our supply zone right here. So let's find some prices on that. I have a high of 23.38. And the low line on that is 23.35. So now we have that set. We have our 23.35 to 23.38. Very, very small amount of risk there. Okay, very small on the 15-minute time frame. Now we do have another one here as well. And I want to show you the differences between these two because this is important. You'll see this every day in the market. Let me mark off these here. Here's our supply zone on this one. There it is. 23.26 to 23.29 is what I have on the XLK here. Take a look at this first one. Let's do, this is supply zone 1, and this is supply zone 2 up here. Let me change the color on that so you can see it better. There we go. So supply zone 1, supply zone 2. Now, can we short both of these? Can we short both of these? Or should we just short one of these and one of these only? Can I get most of the yeses? Yeah, definitely. Okay, we can short both of these. Okay, we can short both of these. It runs up. Here's your supply zone. This is a nice supply zone. Big, strong rally. There's your nice little shooting star doji, big top and tails, and then it just drops straight down. Okay, so that is a shortable supply zone right there. What about supply zone number 2 up here? Yeah, exactly right. It's good. It's more of an extreme level. Okay, so this is much more of an extreme level. So in your plan, you got to decide, okay, am I going to short this supply zone up here, or am I going to short this supply zone up here, or am I going to do both? I'm going to short this supply zone right here. I'm proven wrong. If it gets up in here, I'm going to short it right here. Okay, this is a decision that each one of you has to make. Am I going to short a supply zone 1 or supply zone 2, or am I going to take a chance at both of these here? Okay. All right. So on this one right here, we're looking for the market to run up, XLK in this example, to run up right up into here in our supply zone. Now, give me a situation here. I'm doing a lot of what-ifs here because that's what the market is. What if this, what if this? We need to be ready for it. We need to be prepared for it. So really what I'm doing here is looking left, identify supply and demand, but think right. Okay, look left, but think right. So look left, we've got that in, we've got our supply zones in, but think right. So what I mean by that is get creative here. Go through some what-if scenarios, what-if situations. Let me give you one. What if the XLK, let me just do this, go to our 24-hour session here. There we go. Here it is right here. We're trading right here right now at 23.05. What if XLK opens up right here and it runs right up into my supply zone at the 10 a.m. reversal, and it gives me a nice reversal candlestick similar to the shooting star here, or anything of that nature. Okay, so what if I get a 10 a.m. reversal in a supply zone and I start to see some momentum slow down from the buying pressure, and now I start to see some very good clues of a reversal? You're darn right. Take it. Short it. You're all over that. Okay, I am anyway. Okay, follow your plan. But yes, always with the stop, exactly. Okay, so that's what I mean by go through these what-if situations. Okay, what if you take that short, it gives you a great shorting opportunity here, and it breaks out and comes up into this supply zone up in here. Okay, and it gives you another reversal indication, another reversal candlestick at the 10:30 reversal. Great, there's another odds enhancer. Okay, now these 10 a.m. reversals, don't just pick it because it's 10 a.m. Okay, look left. Do we have supply? Do we have the demand? Those are the real odds enhancers there. Okay, that's, don't just take it just simply because of a time. Okay, we don't want to do that. We want to match it up and make sure that we have it actually setting up for us. And that's, goes with anything. Okay. All right, so that's the XLK there. So we got our plan in place. Now let's go through and look at any demand zones down here. Now you can see this is from yesterday. Nice strong drop, base, rally right here. So what I'm going to do, I'm going to mark off this low right here, this area, but that's not an area worth taking yet. Okay, why not? Why wouldn't that area right down in here be an area worth taking yet? Brian, that's correct. Yeah, it didn't leave it yet, really. Yeah, it's not an extreme yet. Good, okay, very good. Yeah, not a profit margin. Okay, we need to let this thing get moving up here. So for example, again, with that what-if situation, look left but think right, if this thing does come all the way up into here, into S1, we know we're in that stage 3 right now, so we know we can short at the highs, and if it comes down back into this level here, there's your target to cover, and quite even possibly get long, depending on how this actually shapes up here. Okay, so as it comes back down, we're still in that stage 3, so we stick with our rules. Buy low, sell high. Okay, buy low, sell high. Okay, so that's just playing that what-if game. We always want to be prepared for what the market's going to give us. So in this case, we're going to keep our eye on XLK here and see if it gives us that situation. Now, we've spent about 10 or so minutes just on XLK here. You're going to spend a lot of time on these different stocks that you're trading, on these different markets and sectors that you're trading. There's no way that you're going to be able to go through all these sectors and a ton of stocks out there and really analyze this thing and set these things up specifically. Okay, not in any realistic fashion anyway. Okay, so just pick a small basket of stocks, 3 to 5 stocks that you can really track and really watch carefully. Okay, and just focus on a small amount of stocks or a small amount of sectors. Okay, yes, you can trade the sectors. These are the ETFs. You can trade these just like stocks. Okay, given enough liquidity and all that. All right, so let me zoom out on that here. Set that back. There we are. Okay, so we're going to keep our eyes on the XLK today. All right, so now let's go to the main window here, and let's go through the Qs, the NASDAQ, before we take our break. Let's take a look at the Qs on the daily. Okay, and you can see these yellow lines right here, these yellow bands. These are the different supply and demand zones on this right here. Okay, so you can see right now we are in that supply zone, so we're focused on getting short. Where are we going to get short? Okay, well, we go into the smaller time frames to identify that. The 60-minute, the 15-minute chart, focus on shorting at the highs right up here. Okay, And on a smaller time frame, we can buy the dips, the lows right here in our demand zones. Now, if you're a swing trader, okay, let me blow this up here for a moment so you can see this a little bit better. Okay, you're a swing trader and you're in a supply zone. If you want to get short in the supply zone, a lot of you are asking, well, where do I get in exactly, and how do I get the best, setup and all that type of stuff? You can use the smaller time frames to really pinpoint this. In this daily chart right up here, we're in that supply zone. So if we zoomed into a 60-minute chart or even a 15-minute chart, okay, we're looking to get short up here in the supply zone, that upper range right there. Now what that has done is it's maximized our potential profit if this does in fact drop down. It's minimized the dollar amount risk because your stop is just above, and your stop is at a very close point to your entry. Okay, I don't know if you guys remember anyone remember my #1 trading rule, my own personal #1 trading rule? I know some of you guys have it memorized already. Anyone remember what it is? Exactly, I knew some of you guys had it remembered. Yeah, don't lose money. Okay, don't lose money. Now, every book that you read is going to tell you that. Don't lose money. Every magazine article, don't lose money. But how? How do you not lose money? That's the important question, right? How do you actually do that? Give me some examples. How do you not lose money in a trade? Stops, for one thing, very good. Good risk management. Small risk, low risk, good entries, absolutely. A lot of people don't think about that. Q's right. Your good entries. So in other words, as we're in our supply zone right here, we know we can short anywhere in the supply zone. Okay, we know that. We can short as it goes into the supply zone, anywhere in that zone, or as it's coming out of that supply zone, which is your confirmation entry. But if you want a better entry with at least a lower amount of risk, okay, and that gets back to don't lose money, okay, the part of how do we not lose money is by entering up here at a point in time or point on the chart here that offers us a very low amount of risk. So let's go to the 60-minute chart here, and you can see that here. Okay, let me blow this chart up so you can see it a little better. Okay, we have my demand zones in here, and you can see right up in here is our supply zones. Let me go ahead and draw that in there as well. Okay, so we're focused on the extremes, the extreme lows, the extreme highs. Okay, so if I'm shorting in a supply zone on the daily chart and the weekly chart, now I can come in here on a 60-minute chart or even a 15-minute chart, and now I can look to take my shorting opportunities right up here at the extreme highs in that stage 3 base. Now I'm short, my stop is just above the point I'm proven wrong, and I have a great entry on the daily time frame, as a swing trade. So that's one way how we actually use these multiple time frames and analyze trend and analyze risk and all that type of stuff. So when it comes to not losing money, your entries need to be very, very close, as close as you're realistically able to get them, to the point that you're proven wrong. If we're entering short somewhere down in here, well, you have more risk involved. Now maybe on a swing trade you're okay with that amount of drawdown, but why not try to get it more precise? Where's that line go? Where did this thing come from? I just moved it. Okay. We want to try to get more precise. Okay. Then else says, but aren't the reward to risk ratio parameters too risky? Okay. Now, how do you mean by too risky? I'm using this sell setup up here, in the supply zone, to get short on the daily time frame. I'm talking about swing trading here. Okay, as far as this right here, we're in our supply zone. So I'm taking the supply zone and I'm trying to get a much better entry to get short. Okay, that way, let's say this does break out. If this does break out today, you got stopped out on a very, very small amount of risk as opposed to getting short right in here as you enter that supply zone. Because think again, you are still in that uptrend, right? You're still in that uptrend, so if you are going to shorten the supply zone, either wait for confirmation or try to get short up here at the very highs, close to the point you're proven wrong, while you're in this basing pattern And you can do that by going to the smaller time frame. Okay, I hope this is all kind of making sense here a little bit. Clear as mud? Okay. All right, take a look at, where did we go here? That's the 5 minute. Let's do this. Okay, let me show you one more thing and then we'll jump to break here. Let me go to a 15, change these up. Okay, here we go. Okay, this was Thursday's action right here. Okay, now look over here to the left. I'm going to move these lines here because these weren't there at that time. So let's go to there. All right, I'm going to show you something kind of important here when it comes to these supply and demand zones, and you'll be able to use this. You'll see this fairly often. Okay, this was. Come on, let's do. Come on, charts. There we go. Okay, this was on the 25th right here. Rally-based drop. Okay, we know that's a nice supply zone. Nice little shooting star drop right there. We come back up into it and it drops again. Okay, so we have some pretty decent supply zone up here. Now, as the day moves on, okay, we gap down, we start to move up. The next day, we gap up right here, and we run past our supply zone. Okay, now see right here when it runs right past our supply zone? Now, it's already gone into it once. Okay, but we know, sure, we can take it again. It is a supply zone. Now, if you took it in the supply zone here, you got stopped out most likely. Okay, so let's take the worst case scenario here. You had your orders up here waiting to get filled, and you got stopped out. And you say, oh gosh darn it, I got stopped out, and oh my goodness, I knew I was right though, look at the move I missed. Okay, matter of fact, it came all the way back down here into our demand zone target, down here, and then in our demand zone we had a nice little rally at the end of the day there. What do we call this right here? What's the term that we use when this happens? Okay. Now, if you're not sure, there's a clue right here. See where you can look right on the chart? It says bull trap. There's your answer. That's tough questions. Okay. Try to put the answer on there for you too. So this is our bull trap. How do we actually trade a bull trap? You know, because we want to make sure it's not a breakout. Okay, if it's a breakout, it's not a bull trap. Obviously, we want to make sure. Okay, this is a good chance of a bull trap. And now we can actually take that trade. So what we're doing here is a couple things. And this is a 15-minute chart. Let me jump into a 5 and show you exactly what happened here. Okay, here's our bull trap. Let me zoom out a little bit so you can see this better. And you saw us on many, many stocks on Thursday. Lots of them actually set up this way. Okay, price runs up, runs up. We come into our supply zone. Then you see this big shooting star. You're like, aha, supply zone, shooting star. I'm short. Oops. Okay. So, a nice little fake out there, right? It never actually confirmed anyway, though. So if you're, following the shooting star rules, you never took that trade anyway. We come up here. Now you get another shooting star. You're like, aha, shooting star. This is the one. You get short. Oops. You get stopped out again. Okay. And then you get this right here. See this shooting star? You're like, I'm not falling for that again. I've gotten 2 shooting stars. Now I got a 3rd one in a row. I'm not falling for that one again, shooting star in the supply zone. And then you miss the whole move here. Okay. The reason why I'm telling you this is because just as far as learning experience goes and all that stuff, I've taken these before. Shooting star in a supply zone, never confirmed. Oops, stopped out. Oh, there's one. I'm going to take this one. Oops, stopped out. I'm like, okay, wait a minute. This isn't working here. Let me put some more odds on my side. Let me find out what am I doing wrong here? Why are these shooting stars, which are supposed to be so great, why are they not working? Okay, something is wrong with this here. So there's a few things. Number one, you get a strong move in price right up here. And yes, this is a supply zone. But if something's going to come out of a supply zone like it did right here, Now it's our bull traps type of situation where you get a lot of traders taking the breakout right here, but a lot of this is just those first 20 minutes, orders are being filled. Okay, first 20 minutes right here, you're getting a lot of this noise going on. So what we want to do is wait for something more clear, something definite. Wait for this thing to get extended up. Wait for this thing to get a little bit exhaustion here. It's come into our supply zone. Once it breaks out above our supply zone, either you got stopped out if you had your orders in here, or you're still waiting for a setup. Okay, here's your shooting star right here, huge topping tail. What time frame did this happen in? There's your 10 a.m. reversal right there as well. Okay, here's your 10 a.m. reversal, shooting star, bull trap. That's the one that we can take right here. Okay, so I was in Irvine. We actually traded this in class right here, and many of the traders, many of the students took this right here on that 10 a.m. reversal, and did quite well that day. Okay, so we want to just be patient and wait for the trade to come to us. So just want to show you that as far as how to trade these bull traps, because you will see this again. Okay, you will see this again, bull traps and bear traps. Just one little quick way to actually wait for more confirmation to trade those. All right, folks, let's go ahead and take our break here. When we come back, we'll go look at some more stocks. We have the XLK, which was kind of our sector of the day, I guess you could say. So we'll keep our eye on that one as well. All right, so we'll go ahead and go to break here, turn off the recording, and we'll see you in 10 minutes. Okay, very good. All right. Go ahead and show my application share here. Or not. Come on. What the heck? Oh my goodness, folks. Sorry about this. Hang on. I got to reload Illuminate on my other. This is crazy. Sorry, folks. For some reason, this Illuminate is not jiving too well with my one of these computers here. It's pretty screwy this morning too. All right, so I'm logging back in now. Let's see, start mastery, join. Okay, so I'll just kind of talk you through what's going on here while this is loading up here. Let's see, markets are coming down right now. Now, on the markets here, we have our levels already marked in ahead of time, okay? And that's the important thing. You always want to make sure that, you know, we went through the cues, but you want to have this on whatever sector or market it is that you're trading. We want to have these levels, you know, supply and demand marked off beforehand. And what that does is it helps us identify what's really happening, and it helps us be more confident and decisive in our trades. Okay, we're not, you know, taking trades out of fear and greed and hope and all this gambling, emotional, impulsive type of trading mentality. Okay, we have our levels set. We wait for the market to give us that opportunity. Okay, we wait for the trade to come to us. Okay, yeah, I know, guys. I'm waiting for Illuminate to come on here. I can't share anything yet. Okay. For some reason, I've got some real issues on this computer here. All right, so anyways, so the markets, just so we can feel confident. Yeah, basically, you know, that has a lot to do with it, is that when you have everything already done ahead of time, all your prep work is done ahead of time, okay, you have a lot more confidence. You're like, hey, there's my demand zone, there's my supply zone, the stock's in it, I know what to do now. As opposed to just taking trades out of emotion because things are moving up and down quickly and you think it's going to go higher or lower, so you just jump into it. Okay, we don't want to just jump into anything. Okay. All right, so let's see. I was looking at something earlier here. Where were we? Okay, I was looking at eBay a little bit earlier this morning here, and you'll have to look on your own charts here for a second until this actually loads. Are we there yet? My goodness. All right, let me try it. Hang on, guys. Let me try this on a different. Oh, this is ridiculous. There's something seriously goofy with my computers when it works on Illuminate. My other charts are crashing. I got two computers and neither one of them are using Illuminate here. This is ridiculous. All right, let me try something else. Great timing too, right when the market opens, huh? Yeah, exactly, isn't it? Murphy's Law. Yeah, Murphy must be trading the markets this morning or something, huh? All right. All right, so I'm on my triple backup system here, so I guess I could say it's one good thing I did learn in college is always have backup. So I've gone through two of them. Let's try the third one here. Yeah, no, that's the fourth backup is my BlackBerry. Okay, that's odd. Okay, let me give this a shot here. Let me try this way. Application share. Let me close out that one. Okay. All right, let's give this a shot now. Hopefully this will work. Layouts, application share, entire desktop. There we go. Okay, give me number one if you can see my charts. Can you see TradeStation? Awesome. Okay, cool. We're in business. All right. That was fun, huh? Okay, so what I'm going to do here, I'm just going to walk you through what I look for in the morning here. Okay. Yeah, we'll take a look at SMH in just a moment here. What I do, I got my radar screen right over here. And let me maximize that so you can see it. There we are, okay? And I got all the stocks right over here. Now this is the same radar screen that you have in your Pro Trader classes, okay? Same stocks on here, okay? And it's sorted by your average, your range, your beta, your volume, and all that stuff, so it meets all of our requirements in there. Now this is Stock Mastery, so we can even throw in a few of the other ones, the more volatile ones, your Apples and Rims and your Berkshire Hathaways and all that type of good fun stuff. So what I do real quickly in the morning to trade the gaps here, I just do a quick sort from net percent change, net percent from open right here. I just double click on that. And I'm going to go to Format Page and Sort, and I want to keep this updated every 60 seconds. Okay, so it's going to keep it up. Now, I'm always going to have the strongest stocks on the top, and I'm always going to have the weakest stocks at the bottom. Okay, so at any point in time, it's going to tell me the strongest stocks and the weakest stocks. Okay, so the very first few minutes that open, matter of fact, right on the opening bell, and even you can do this before as well, you'll see stocks that are gapping up, gapping down, running into supply, running into demand. So this is an example earlier that I wanted to show you here. I was having my chart problems, is this. Okay, eBay was on the list of just moving up, moving up, moving up. Now see how we run right into our supply zone? Here's your rally base drop right here. Okay, and this is all I'm looking for here as far as trading the first few minutes from the open. Is look for big movement in price, either up or down, okay, either one. In this case, eBay is number one on the list here. And now do I have it in a supply or a demand zone? Here's another one up here as well. More extreme level right there. Okay, so I'm just looking for these extreme levels on the highs, extreme levels on the low. Now the important things that needs to match up on the charts on the bigger time frames as well. So for example, on the daily chart over here, okay, so we've had a nice big run up and it's pulling back right here. So overall we have a major uptrend going on here on the daily chart here. It's just pulling back right now, kind of a bull flag type of pattern here. Now on the 60-minute time frame, you can see we're in a downtrend. Okay, now if I want to shorten one of these supply zones here, that's exactly what I want to see. I want to see it in a downtrend. But that's not what we're getting on the daily time picture. And the markets, take a look over here on the left, you can see it's holding right at the highs of the day right there. Okay, let me flip to the Qs here. You'll be able to see that as well. Okay, this is just the other ones are on a daily chart here as far as the interval of the radar scan, but this is updated every 60 seconds here. Okay. All right. So in this here, all I'm doing is marking off these supply zones and these demand zones. Okay. Now, oftentimes when you get this, eBay's up 2% now. Xilinx up getting close to 2%. We've identified the strongest stocks on the list here so far. Here's another one. See how we're running straight up into a supply zone? This one's much better here. Okay, see a strong rally, strong drop. Now we're starting to come, did we go through it? Yep, we just came through it right now. So, this is very extended right here. Now see how we don't want to buy this breakout? Okay, this is huge up here, big extended move. We don't want to buy that breakout right there. Okay, yeah, it's got great speed up into here. Great area of resistance right here. Okay, so I like this one as far as a reward to risk ratio. This is very good here. Okay, daily chart, we've dropped down. We're kind of basing sideways right here, and we're just now starting to come out of that, so we need to be wary of that right there. On the 60-minute time frame, we look good. On the 15-minute time frame, we look good. Now what we want to do is, that's good by itself alone right there. Okay, so we want to match this up with, let me blow this chart up a little bigger so we can see it now. Okay, we always want to match this up with the market as well, if we're able to. Okay, you don't have to, but it's definitely a very strong odds enhancers. Okay, so in this one, as we're coming up, we're in our supply zone right now. Let me draw these out here. Here we are. Okay, so we're in it right now. This is Xilinx on the 5-minute chart. Okay, so we've got our topping tail right now. Now if we can match this up with that 10 a.m. reversal, and we're still 15 minutes away from that, okay, this would be much better. So this is really all I'm looking for here, is a stock to have a big run up in an area of supply or demand, match it up with the 10 a.m. reversal, with whatever other odds enhancers that you want to use for that, and then take the trade based upon that. Okay. All right. So there's that one right there. Now my plan is I'm not allowed to take any reversals for another 5 minutes. Okay, so I have to wait 5 minutes in order to take this trade. If that means I miss this trade, then so be it, then that's what it means, that I missed this trade. But because of that, it's going to save me from getting stopped out and being wrong more times than not. It's in the supply zone. I love the reward to risk ratio on this. Okay. Yeah, we have 2 10 a.m. announcements today, and that may help right there. The first 20 minutes, no, I can trade the first 20 minutes, but it needs to, if I'm taking the reversals, I need to wait and make sure that it's in the 10 a.m. reversal time slot. Okay. So that's why I'm using that. I just want that as an extra added odds enhancer, I guess you could say. All right, so the Q's looking strong so far. Here's your 15-minute. Let's take a look at that, what was it, XLK we were looking at earlier? That's correct, Lee. Yeah, that's correct. Let's take a look at that XLK. How do we do here? Do we get, okay, so we came up, we're up into our supply zone up in here, getting close to it. Okay, so we're getting very close to it. Running up, running up, running up. We're just shy of it. We're getting very, very close to it. Remember, this was our plan from earlier this morning. So if we can get up into here, supply zone, in the next 5 or so minutes, this will be a nice little short setup for us. Okay, now, again, look left but think right. Okay, we're looking left over here and thinking right. Where's the target? Well, we got a beautiful target right down here, and that would be your ultimate target down here below. Okay, in the meantime, we can either manage the trade. Now, the reason why I like this is because you have such a nice run-up from this area, nice little origin there. You also have the gap fill as well. Okay, you always want to pay attention to those gaps as a target, so you can sell or cover half the position here and the other half here, or however you want to manage that. Okay, but we always want to think right, think right, think right. If I do get into this trade right now, coming up into here, where am I going to exit? Okay, we want to know that ahead of time. All right, so keep your eyes on that one as well. Let's see, Joy G, someone was saying something about that. Now, you guys, you're a stock master, you've been around this for a while, you know what we're looking for. Okay, so what I want you to do, let's all be proactive here and say, if there is a stock in a strong supply zone or a strong demand zone, go ahead and type it in. Now, I want the best of the best. Don't give me this, oh, well, this one's close because I'm in it. You know, none of that stuff, okay? Get something that is right in a supply or demand zone coming right into it with very, very good odds. Okay, NASDAQ's getting close to it on the 15. Okay, so let's see what we got here. Let's take a look at BBY. Where's the supply zone there? There is no supply zone. Okay, it's breaking out of the daily right here. Now, this might be a nice momentum play here as far as the daily. Look at that bull flag. That's about as good as it gets right there, folks. Strong move up, consolidation near the high, nice high and tight bull flag, and it's breaking out above the highs of that today. Okay, so as this is more of a momentum play here, and a momentum, okay, don't take this right now. Don't buy into it right now. It's already far extended right here. Okay, we're going to have to wait for a nice pullback on that one there. Okay, let's take a look at here. XLB, NTAP. Okay, NTAP, yeah, nice bull flag on NTAP here as well. Okay, on the 60-minute chart here. On this one here, there's a 5-minute chart. Getting a nice little cup shape there. Okay, we're in that supply zone. Now on this one I don't like this as well because see how you rally and then the drop, it was a very kind of a shallow drop right there. Yeah, we want to see pain. We want to see extreme sell-off. That's the best type of situation there. Other than that though, it's fairly close. Let's see, deck. Okay, nice, strong arrival. Look at that arrival on that one. Strong arrival. Come on, charts. There we go. We are in that supply zone right now. Very nice. I like that one. Nice arrival. Look at your profit potential on that as well. Strong profit potential. Who is this? Fox. Okay. Good call on that one. That's what we're looking for, something like this. Let's take a look at the other time frames, though. Strong on the 15, 60. Okay, getting up into it in our 60 as well from over here. Okay, so that part's good. Now you can see right here in this overall picture, see how we're in that stage 3 right here? Okay, we're just basing right here, buy low, sell high. So in this case, we're buying at the, or shorting at the extreme highs, buying at the extreme lows right here. See the little hammer right here from your demand zone over here on the left? Okay, so keep your eyes on that one as well. The daily's looking pretty good on that one. Alright, so I'm just kind of watching this one here. Alright, keep this one in the watch list. ISIL. Let's look at that one real quick. Nice extended move to the upside there. Do we have anything to the left? Alright, you got a little bit over here on the left. Okay, this is more of a drop-based drop from over here. Okay, but we're there. Not the best situation. What we want to see is this thing up in this area, right up in here. It would be a nicer level right up in here. Okay, but that is extended. Okay, so a nicer level on ISIL is going to be starting right at 1521. Okay, so if that gets to 1521, keep us alerted to that. Okay, now nice extended move. You might get a nice little pullback out of this, but you just don't have anything over here on the left to go by as far as your odds enhancers and all that. Let's take a quick look at eBay. How are we doing on that? Okay, eBay's starting to turn a little bit here. We got a little, okay, here we go. We're getting a little shooting star starting to happen. Not really shooting star, but more of a topping tail on this one right here. Okay, are we getting a little turn in our markets yet? Yeah, topping tail in the markets. Okay, get ready. We're getting close on this one here. This is a smaller level, rally-based drop from right over here. Okay, that is shortable. We are in that level there. Okay, so if this breaks that shooting star, there's your entry short. So that's going to be 2710, so 2709 would be the actual, there it is, done. Okay, so you're in it now. Your stop is just above at 2617. Okay, now as far as targets go, this is going to be an obstacle we're going to have to clear right here. Okay, right in this zone right in here, your $27 range. Okay, so that's a very important one right there. Q is still fairly strong. How does Xilinx work out? Do we get anything on Xilinx yet? Okay, went above, possible bull trap on this one here. Very nice profit potential on that one. Very nice arrival on that one as well. Okay, you can see over here the Qs, we're getting another topping tail here. That's exactly what we want to see. So far so good. Let's go look at some weak ones here. Boy, RIM's getting beat up again today. Nice strong downtrend here on RIM. Amazon looking pretty weak here as well. Okay, market, we're getting some topping tails again right now. Another good sign. Okay, let's take a look at that XLK. Okay, this is good here. The XLK starting to pull down right here. Came just into, did we get our supply zone on this? Just touched it right there. It just touched it. Now we're starting to pull back down after a very nice arrival. Okay, very good, just what we want to see. Okay, I'm looking for other setups here as well. There's our 10 a.m. Time period right there. Reports are being released right now. Evan, I don't think there is. Are you talking about the quick quote window? The quick quote window, is that what you're talking about? Yeah, I don't think there's a charge for that. Not that I'm aware of. Let's take a look at the Russell real quick here. Okay, the Russell's just basing right now. Okay, now here's something very interesting. Here's what I want to show you something. When it comes to this 10 a.m. reversal here, okay, see the big run-up in price we've had? Now, two things are going to happen. Either the thing's going to reverse and head back down, okay, or if it's going to base, and then it's going to break out even higher. Okay, now, that 10 a.m. reversal happens roughly 80% of the time. Okay, very highly reliable. If it does not happen, if you get the reversal and it does not happen, that's very oftentimes when these things just break out and continue even higher. Okay, so we can use it either way. It doesn't have to reverse to make a good trade here. So you can see the Russell, see how it's basing towards the high right here. Okay, so that would be the, if it doesn't reverse, then it's only other one way to go, and that's to the upside. But again, be careful. If you take these breakouts, see how you're already extended up in that price curve? Okay, that move's already been made right there. So if it does break out, sure, it could go higher. It definitely can. Okay, but don't take a breakout just because it's a breakout. We want to stack the odds on our side. Okay, only trade the most strongest stocks out there that are breaking out there. Go where the order flow is coming in, where the demand is coming in. Okay, but when you take these breakouts like this, you've already missed this big move right here. So that's why we always want to get in those demand zones where you have the least amount of risk with the highest amount of profit potential up in here. Okay, are we at supply over there? Oops, what the heck happened there? Go back. There we go. All right, so let's see if this thing can actually get moving down or just get moving. Here we go. Okay, market's coming down just a little bit here. Go back to that eBay. Okay, so far just hanging on there. Xilinx coming back down as well. Nothing there. Nothing there. JG coming down here also. Change that to 15. There we go. Beautiful shooting star there on Joy G on the 15-minute chart. Okay, do we have anything over on the left? Nothing on the left there. Okay, now on this one right here, okay, take a look at Joy G on the 15. Okay, see how it's a nice little shooting star shorting opportunity on this one right here. Now, I want you to take a look at the overall kind of big picture here. Okay, we were basing. We broke out above the base. So in this case here, when it breaks out above this base from over here, okay, right around $59 or so, you'll get your gap fill, and you got your prior supply over here as well. Okay, rally base drop. Okay, so prior supply may end up becoming new demand. In this case over here, just like your prior resistance becomes new support type of situation. So on this breakout to the upside, if you're short right here, you got to know where you're at on the big picture. Okay, this is a day trade. Okay, don't expect this thing to drop all the way back down here somewhere. Okay, you do have support right down here at that $59 range on the gap fill and from the previous highs from over here on the left. Okay, so don't expect this thing just to drop down forever and ever here. Okay, let's see, deck. Yeah, I know we were looking at that earlier there. Okay, yep, that's dropped down as well, came into our supply zone. That one came down nicely. Let's go to the 5 minute on that one. Yep, there it is right there. Exactly right. Yes, exactly right, T. The conventional resistance could become the buyers, okay, that support. And we always want to be aware of that. Okay, we definitely always want to be aware of that. Especially on those breakout examples, you know, when it breaks about the high of its range of that stage 3, like it was. Who was that? Joy G, was it, right? Here it is right here. Okay, we've broken above. Now that is a breakout. It has broken above. So this is the very beginning stage of a stage 2. Okay, so it's rally-based rally on a bigger time frame. So now that we're in that, see how it's just getting a little pullback right now? Okay, it's starting to get some buyers come in right here. Okay, so don't expect it to drop all the way down here because it is a bullish stock today. Okay, and it's above the highs from over here. So we are in that stage 2. That's why we want to focus on the buying, not the shorting as much. Okay, if you did short this here, that shooting star on the 5 minute up there, it's going to be a very short-lived trade, at least most likely anyway. Okay. Yeah, exactly. It's pretty extended there, isn't it? Okay, so let's go back to our Qs here. Okay, here it is. See how the Qs, here's a good example. Okay, shooting star, 10 a.m. reversal, pulls back, a little bit of a bottoming tail there. Now we're getting some buying pressure coming in right here. Okay, so what does that tell us? What does that tell us if we get a failed 10 a.m. reversal with shooting stars in the supply zone? Tell us that there's a lot of buying pressure coming into that, isn't there? Okay, a lot of buying, yeah, exactly right. A lot of buying pressure coming in there. Okay, so don't expect this thing just to drop down and fill the gaps and all that type of stuff. Not yet anyway. We haven't had any of those signs. Let me, come on, fix the charts. There we go. Okay, so eBay working out. So far so good. Okay, again, that $27 area is going to be a tough nut to crack there. As far as the target, and why I'm looking at that is this previous resistance right over here. You're going to get some support, especially that $27 range there. You're going to get some buyers stepping in right in that range right there. So if we clear that, we should be fine on the way back down here. Bob's saying, interesting that the market hasn't reacted more favorably to the bullish economic announcements, sign of fundamental weakness. You know, it's a good question because when you look at certain economic reports that come out, kind of an interesting thing happens. When you are in an uptrend, higher highs and higher lows, if you have bad news, markets for the most part typically ignore that bad news. And that's why a lot of times you'll see markets rally on bad news. Okay, or when the market does give you bad news, it'll have a little bit of a pullback, but it's just providing a buying opportunity. So you have bad news, a little bit of a sell-off, and the buyers step in. They want to buy low. Okay, they want to buy low. So that's what a lot of times what you see there, and vice versa in a downtrend. Okay, now at this point in time, interesting thing's going to happen. We're in a supply zone here, and we're either going to continue to drop down or it's going to form a bull flag and head up higher. At this point in time, now see where it's starting to form on that 5 minute chart. Okay, starting to form that possible flag right here. You got the pole. No problem, Rick. I feel sorry for you going to the dentist. Let's take a look at Xilinx here. Okay, good example of a breakout. We pull back right into our zone. Now Xilinx heading higher now. Okay, nice little breakout here on Xilinx. Look at this, nothing over here to the left. Okay, these are the strong stock today here. Let's go in the 15, anything there? Nothing on the 15 either. Okay, Xilinx could really run today. Okay, it's got room to run. Oh, that's 153 minute charts. There's our 15. There we go, that's a better picture. All right, here's your supply right over here on the left. Right here. Okay, so we don't want to take that breakout on that one there. There it is right there. There's your supply zone. Okay, so you see we ran right up into it over here on the left, pulls back down into it, and then from the supply zone from here on the day also. Okay, there we go. He's asking, Ryan, why wouldn't you comment on the origin of the real move versus the prior resistance becoming support? On which stock are you talking about, T? On side links here? Oh, on eBay. Let's look at that. Okay, so you're saying the origin of the move is all the way down here. Yeah, there's nothing wrong with that. There's a nice strong demand zone there, very strong. So if it gets back into that level, that's a very, very nice demand zone. I like that a lot. You know, depending on the arrival, if it arrives down nicely, then heck yeah, it's a very nice one. All right there, that 2650 range right there. The reason why I was mentioning prior resistance becoming support is because there's a lot of traders that use that in their trade plan. And you know, for example, when this pulls back, you know, if it does, or any type of situation like this, it pulls back right here to what was that prior resistance. And so that's what I'm saying. If you short it up here, we've got to get through this $27 range because of this obstacle in the way right here. So I'm using this as a gauge to say if we can break through this resistance over here, which is now support type of situation, then we can head down much lower here. And I'll be very confident in that part that we can let that run for a little bit longer. But every you know, you get levels all over the place. You're always going to have an obstacle in the way somewhere. Okay, so we got to get through that level right there. Now the one I really want to see is this extreme level up here. So what I'm waiting for is this really nice extreme level here, although this isn't too bad of one right here. Shooting star, 10 a.m. reversal in a supply zone right here. That's not too bad. It's not bad at all. Okay. Yes, T, exactly right. Yeah, I'm not saying to take that trade. I'm just saying you use that as an obstacle in the way, or as you know, a target if it's down here as a target. And I'm not saying take the trade. I'm just saying you know, we need to be aware of it. We always need to be aware of that. Okay, RIM. Eli is saying RIM. Okay, nice bottoming tail right there. And you're saying from this right here, Eli. And you have another one right there. There we go. Okay, so it came down just below that there. Let's jump back into the 5. Yeah, I wouldn't be. I'd be very, very cautious about buying RIM right now. You know, it's just been so beaten up. There's a lot of selling pressure behind this. Okay, a lot of selling pressure behind this. Very steep sell-off right there. Okay, it's come up into. Had a nice little rally from its demand zone right there. Okay, so just be careful with this. Maybe you know, less share size, something like that. Adobe. Yeah, oh yeah, that's fine, Eli. Yeah, that's fine for that. No problem at all. That's a good little scalp situation there. Okay, Adobe. Very nice arrival. Are we in a level? Let's see. Here's our 15-minute chart. Okay, we do have some from up in that area. It's not too bad right there. Okay, on this one right here, see how we're just in our basing pattern? This is our stage 1. So where are we at on this, on the stages? Stage 1, 2, 3, 4. Yeah, okay, so we're in a stage 1. Are we in a, now we know we can buy low, sell high. So in this case right here, we're in a stage 1 and we're at the high. We're in our supply zone. Okay, so now we look to take a short trade. So this is Adobe. That's on a 15. Let's jump into a 5 right here. Okay, so we need to see a little bit of weakness, which we're starting to get, a little bit of a slowdown in momentum. Strong move to the upside, and now it's starting to slow down a little bit here. Take a look at our Qs here on NASDAQ, starting to slow down a little bit as well. Okay, market so far holding its highs. It's not going to go up forever, so we want to be ready for it when it does reverse. Okay, I like Adobe on that 60-minute chart. That's a good little setup there. IWM. Okay, so we did break out above. See what I was talking about? How it just holds, 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 holds. You never got that reversal. If you don't get the reversal, you're going to get a breakout. Okay, more times than not. Yeah, look at that. There we go. Here's a nice one. Right up into it. Okay, very nice. Same thing. In this case, we're in a stage 3 right here. There's your highs. Here's your lows right down in here. Okay, so we buy low, sell high, and here it is. Okay, so we're right into our supply zone right now. So now we look to take these short trades. Okay, good find on that. Not quite there yet. See how it's still strong. If it pulls back, it'll probably do so in the next 10 or so minutes here. Yeah, it is pretty deep in the level. It is. And you know, here's the other thing that concerns me is this. Okay, see how we run up into our supply zone and we consolidate, we just kind of base in it and then it breaks out? Okay, that concerns me because it's telling me there is a lot of bullish pressure behind this, and if we're in that supply zone, we're deep in that supply zone, so it is eating away that supply right there. Yeah, the Qs are in the top of its range as well. Actually, let's see here. Here's our Qs. Zoom out on that. Okay, getting up there. Still got a little ways to go on the Qs. So got that big topping tail from over there. Yeah, TLT, oftentimes you'll have that where TLT matches up, has a nice inverse relationship with the market. So if we can get this in a nice demand zone, I got to go back a bigger time frame here to find that. Okay, nice big strong drop. Look at that big drop off right there. Okay, so you can see there's a nice little breakdown from that support right there. Let's see. Take a look at the from the daily here. Yeah, we gotta go back a ways to see this. But yeah, oftentimes you'll see when it has that inverse relationship, it has a nice little odds enhancer for us. And a lot of traders, they'll use that, you know, when they look at their supply and demand zones as far as their odds enhancers. They'll use the bond market, in this case the TLT, as an odds enhancer. So if the TLT is in a demand zone, like we have right here, okay, they'll use that as, you know, a point system. They'll add more points to their odds enhancer there. So yeah, you can definitely use that. Okay, here we go. Getting a little red candle right now. Nothing so far. Qualcomm. Yeah, I'd wait. This is just me personally. I'd wait till this gets at a more extreme level here on Qualcomm. So you're kind of in the middle of that range right there. On the 60. Okay, I want to see it at a much more extreme level up here higher. Nice little inverse head and shoulders there on Qualcomm though. Yeah, exactly, Dave. Okay, T, that's a really good comment. Okay, and that's important to understand. Okay, T's saying this is where I get in trouble. We're talking about being in a supply level in the bigger picture. I get short, but then it blows right through the supply. Okay, let me kind of share with you some reasons why that happens, and so that we don't get caught off guard on that. Okay, number one, what's the overall trend on the bigger time frames? Okay, if you're in a one and getting short, that's obviously going to hurt it more. Now, a lot of these stocks are in their stage 3 right here, and that's going to help. Stage 1 or stage 3. Okay, so we can short into supply zones like your eBays, you know, up here at the extremes, and that's the next point, is wait for the extreme levels. Okay, wait for the extreme levels. Now, I want to show you something here. See how eBay on the 5-minute chart, see how it's basing right at the highs of that big move right there? What does that tell you about price? What's happening here? What's the story being told? Yeah, the buyers are in control. How do you know the buyers are in control? I mean, really now, if this was a tug-of-war, it's kind of I guess you could say a stalemate right now. Okay, but who has the real advantage? Yeah, prices are not dropping. Now, in this case, if this is a tug-of-war, the buyers have the sellers almost all the way on their side, and they're holding them there, The sellers can't bring them back over to their side. The sellers can't bring them down here. So all the buyers have to do is just give one last tug, and they're going to win that battle. And that's what's happening here, is that this strong move up, that's the pull, big explosive move up, consolidate, basing right here at the high. Okay, oftentimes you'll see this type of pattern here where we're in a supply zone. Now, the more that price loiters in this supply zone, the more it just kind of hangs out in that supply zone right there, the weaker that supply becomes. Okay, so this is getting ready for a breakout. Okay, getting very close to it, in fact. Okay, especially if the markets are doing this, and you see a lot of the other stocks doing this as well, which we have seen. Okay, so a lot of the stocks are doing it. They're just kind of hanging out here at the highs. Now, it doesn't mean it's going to break out. It certainly could go down, but I can't tell you how many times I've seen this where stock runs up, base, and then bang, the thing just breaks out. Now, in this case here, if this breaks out, you have a big obstacle in the way. This is your extreme supply zone here. Okay? Yeah, you know what, Stop Hunter, I learned that in college. Every now and then I'll throw out a big word, make myself feel smarter, you know? Loiter. All right, either that or that was when the cops busted me. Oh, there's no loitering here, son. Okay. All right. So anyway, so that would you know, help a little bit with these supply zones here, as far as taking supply zone trades when things are kind of just loitering up in here in these supply zones. And the other thing too is, you know, focus on the extremes, the extreme highs, the extreme lows. If we're trading the little you know, ones in between here, you don't have the potential profit potential. Yeah, you can still have a small amount of dollar amount risk, you know, depending on where you're entering your stop is. That part could be the same, but the profit potential isn't always going to be as great, and you're not at the extreme highs or the extreme lows. Okay, you're a convicted loiterer. David, I don't even know how to pronounce that. I'm not even going to try. LVS, let's take a look at that. Okay, let's see, LVS, very strong breakout right here. Yeah, this is kind of an example of what I was talking about. Let's see here. Okay, price moves up, and see how it just kind of hangs out right here. There's your 10 a.m. quote-unquote reversal. It never happened. Okay, that's what I'm saying. Use that 10 a.m. time frame to identify, well, we know that it'll drop 80% of the time, or excuse me, reverse 80% of the time. And the 20% that it doesn't, don't just say, well, I can't trade it. No way, it gave you some great opportunities to get long in this case, and a breakout. Now this is your triangle pattern here. Okay, there's your little triangle right there, and so on. Now, where would you find these stocks? Well, these stocks are going to be, I'm talking about your bullish momentum stocks, are going to be at the high of the list up here. Okay, for the most part. The weakest stocks are going to be down here at the bottom. Okay, your Garmins and Junipers and so on. Okay. Where'd my price go? Go back. There we are. Okay, so there we are right there. Now, yeah, Jerry, let's see. Is anyone else in LVS right now? Okay. How are you going? Are you long or short? Because you've gone through your supply zone from over here. Sold everything at 10 a.m. Okay. Anyone else that's in this position, are you long or are you short on LVS? I'm asking this because you need to know what your exit strategy is on this, okay? How are you going to manage this trade? Where are you going to exit at? Okay, any trade that you take, you want to have, you know, an exit in mind. Oh my goodness, David. David. Yeah, means words with lots of syllables, exactly. All right, let's take a look at some of these here that are, see if anything's setting up for us for the rest of the day. Okay, Autodesk. Now, on Autodesk right here, okay, did you guys get that when we were trading this earlier? Did you guys get in on this? This was that first one where I said buy on the exact low. Everyone get that? Okay, let me show you something real quick here. You know, it's when we're talking about exits. Okay, now when you buy the exact low, just like we teach you, okay, and the thing starts going just crazy like this. Okay, this is just what I call going ballistic. Okay, the thing's just going straight up or straight down. In this case, this thing's going straight up. Now, there's two ways to do this. I'll show you the first way if we're long. Okay, if we're long in this trade, let me show you how to manage something like this, because this is where it gets kind of tricky. If you are in a long position, the stock starts doing it, and it will. You'll get a trade occasionally where the thing just goes nuts like this. It just goes completely ballistic. How can we manage this trade? When do we sell? How do we manage the thing? What the heck do we do? Okay, there's no technical stop. There's no higher high or higher low to move our stop up. Okay, good. Getting some good answers here. Very good. Yeah, what we're going to do here is just take the ballistic exit technique. Okay, now we want to make sure this thing really gets moving. Don't just use this right off the bat here. This thing really needs to start getting ballistic like it is now. Okay, see how, here's our current candlestick right here. Okay, it's currently trading right there. My stop at this point in time is going to be underneath the prior candlestick. Okay, underneath that prior candlestick, the prior low. Okay, so as this thing goes ballistic like this, I'm just going to keep moving my stop up underneath each low of the next candlestick that forms. Okay, so right now my stop would be right there. And oftentimes what you'll see is this. You'll see when it actually does reverse, you'll see it start to narrow, a narrow range candle. It'll get much smaller like this. Okay, and so once that completes, it's done, then we can move our stop up underneath it just like that. And then here comes the red candlestick on the way back down. Just like that, okay, and that'll get us out. Okay. Now, so that's option number one. Option number two is over here if we have a supply zone. Okay, if you have a nice strong supply zone, those make very good exits for us. Okay, very good way of managing that trade. Okay, so we'll put that in there as well. Okay, so we have either the ballistic exit, a supply zone exit, or this. If you get a reversal candle, okay, reversal candle exit, preferably in a supply zone because we don't want to be fooled by just some random little reversal candle. I mean, it needs to be solid reversal candle. In a supply zone, there's no doubt about it, that's it, we're done, we're out. Okay. Otherwise, we're using that ballistic exit. Now, what do I mean by reversal candle? No, Helena, we wait for it to, I'll show you again here. Okay, we wait for this to actually close. So, for example, okay, there it is. This candlestick just closed, so now I move my stop right underneath this candle right here. Okay, so now if this closed right here, okay, it's not closed, but if it did close, then I would move my stop underneath that one right there. So as soon as that candle closes, I move it right underneath the low of that. Okay, but I have to wait till the closed candle. Okay, so it's always below the low of the last closed candle, and that's what we use there. Yeah, exactly, Gary, and yeah, shooting stars. Okay. So shooting star, a narrow body, a narrow range body, candlestick, anything of that nature right there for inner supply zone, very good way to actually get out. Okay. Jim's asking, is there a best period for the candles intraday? 5 or 3 minute. I personally prefer the 5 minute. I like setting up the actual levels on the 15 minute, getting the supply and demand zones on the 15 minute, but I'll go into a 5 minute candlestick to actually set it up. On occasion, I will use a 2 minute, but that's just if I get something that's a very small basing pattern, like on a 5. I'll go in on a 2 minute just to get the really pinpoint the price. But that's fairly rare. It's not that often. I'm typically using a 5 minute on that. What about big candles, T? Oh, you mean like on this, on a ballistic right here? Okay, same concept right here. Now, that's a good point. If you get something like this, just say one heck of a huge, gigantic candle, like this. Okay, 2 ways of doing this. Either stay with the ballistic rule, and it's an easy rule to follow, so we can just use that. But if you get a big green candle right here and it's going into your supply zone right there, then absolutely you can take that exit. Okay, you can take that exit right there. Okay. Yes, you can use half as well. Now, because what we can do is if you have a huge green candle, really you can count that as really almost 2 or 3 candles. Okay, so you can move it to half as well. Okay, there's nothing wrong with that. Okay, because we don't want to take such a gigantic drawdown on that. Yeah, it's a big speed candle like that. Doug, go ahead with your question. Doug, let's see. Stopped out on shorts in good supply zone on big and small time frames. On HK and racks, trends were down as well. This has happened a lot. Please comment. Losing confidence in using the supply zone with overall markets moving higher, even though they are in a supply zone. Doug, that is a great comment, great question. Let me summarize that by this. Let's see if we can do this here. Okay, let me put it this way. Has anyone else with a green check mark, actually raise the hand if anyone else is having a similar issue with that, with Doug's question. Just raise your hand on that. Okay, so about 15 or so of you there. Okay, of those 15 or 17 or however many are there, okay, now we're getting more here. Of those, how many of you, now with the green check mark next to your name, for those of you that raised your hand with the green check mark, how many of you have very specific rules in place when you take those trades? How many of you have very specific rules in place when you make those trades with the green check mark? Okay, so about half, give or take. Okay, more than half. Okay, almost everyone. Okay, good. Okay, now with that in mind, this is really important. This is why I'm asking. This is a great question, a very good question. What are the rules? Well, whatever the rule, odds enhancers, trends, things like that. Now, when it comes to these rules here, and having your plan, this is very important. Having to study your plan, study your trades. Now, how many of you with a red X, in this case, they're on this list here, how many of you study your trades after each day or each trade or each week? How many of you diligently study those trades? Excellent, good, that's what I want to see, good. Okay, most of you. Okay, very good. When you study those trades, you need to ask yourself some questions here. And the biggest thing is, why did this not work out for us? Okay, what were some of the factors involved? Why did this not work? And I'll tell you the number one reason is exactly what Stephen just wrote in, fighting the trend. It is so critical that we do not fight the trend. Okay, and I know it's difficult because when you look, this is why I mentioned it earlier here, look at this uptrend. We're in a supply zone. Okay, so it says look to shorts. If we're going to buy, we do it on a smaller time frame, on like a 15-minute chart. Okay, we don't want to fight that trend. Think of the trend as like a giant wave. Okay, and if you're surfing against that wave, good luck with that. Okay, it's so difficult to do that. So we are in that supply zone on the daily time frame. But notice something. Notice how we're basing in that supply zone for a very long period of time now. I mean, we've been in the supply zone for quite some time. This is several days here. When you get a supply zone, you want to see some just drop hard. So we're basing now in a supply zone. So at some point in time, we're just saying, look, this supply zone is null and void. Okay, because we are chewed up through all that supply. We're getting extremely close to that. We're getting very, very close to this breakout right here. And you can see it setting up on the 5-minute chart. Okay, see how we're just getting stronger and stronger and stronger and stronger? Okay, now we're coming up into the supply zone from over here. So on an intraday basis, this is a nice extreme level. These are the levels that we had marked off from earlier this morning. Okay, so one thing that may help you with that is only trade the extreme levels, the extreme highs and lows. And if you're in an uptrend, only buy the extreme lows. If you're in a downtrend, only buy or short the extreme highs. Okay, and that will make a big, big difference in your trading. So I know when you get stopped out on several trades and stuff like that, it is frustrating. Okay, it's a frustrating process when you're figuring out all this stuff. Okay, so stick with it. Keep studying those trades. And what I want all you 15 to do, that you checked, that you said you have that same issue right there. I want you to go through your plan and say, what is really working for me? Look at all the trades that are working, and what do they have in common? What are the trades that are not working? What do they have in common? Okay, and identify what is really happening, where the strengths and weaknesses are. Identify those weaknesses in that plan and reduce those weaknesses, or just eliminate them completely. Remove them from the equation. So if you're shorting in supply zones in an overall uptrend, and if you notice that you're having a lot of inconsistency with that, then remove it from the equation. Okay, it's no longer a rule that you can short that. Okay, so now just focus on the buying opportunities with that trend. I can't stress how important it is to go with the trend enough. Okay, so hopefully that kind of helps clear that up there. And if you need to, once you go through that and really study that, and as a matter of fact, we're having some trade study and analysis days coming up very shortly this month, and I think that will really help with that too. Okay. So anyways, go through that, identify what your strengths are, identify the commonalities of that, of why the ones that aren't working, why the ones that are working, and so on. Okay. All right, folks, went a little bit over on time today, but that'll do it. I'll be in the stock room next coming up. Michelle and I are doing the stock trading, we're doing swing and position trading analysis. So I'll be typing in some trades as I see them as well. And I'm going to get back to trading my futures here. And I'll see you in the next room. Michelle, thank you. Kevin, thank you. And we'll see you.